Hey, my name's James Nicholson and welcome to this channel. In this video, we're going to answer the question, should you be investing through a limited company? Now, this channel is all about property investing, my journey in my investments, and if you follow us along for the investment journey of my two daughters, Georgia, who's 21. We've just bought our first house together up in Doncaster and we're buying a property down south at the moment, so you can find out all about that on this channel. And we're buying a portfolio for my daughter Emily, who's just a baby and just one. So join us on the journey by subscribing to this channel and hitting the bell notification and finding out all the highs and lows and everything in between. Now, a few years ago, you wouldn't have needed to use a limited company to invest in property. I didn't, and I've been an investor since 1999. That's when I bought my first property in Dorking in Surrey for just £45,000, and it wasn't even something that people spoke about back then. But the government has changed the rules. Now, if, for argument's sake, you were to rent your property for £1,000, and let's just say the mortgage is £600, not 600,000, £600, you would make 400 profit in the month, all being well, right? That the boiler doesn't break, and let's just make it easy numbers, right? So your mortgage is 600, your rent is 1,000, and the difference there is 400. Now, for many, many years, we would pay the profit on the 400. We would pay tax on that £400. And now the government has changed it that we can't knock off the mortgage payments as a cost, so we must, as individuals, pay tax on the full £1,000 rent, which is crazy. It's just not very good for investors at all. So now we have to consider, if we want to invest, which is still a very, very smart thing to be doing, should we be going through a limited company or should we do it personally? Well, there is a yes for both of those. Now, if you are just planning on building a small portfolio and you're a lower rate taxpayer, then you might want to look to invest in your own personal name. So maybe you're looking to get 2 or 3, 4 properties up north, not particularly big properties. The rent's not going to be particularly high, but maybe you're going to make £1,000 a month in total profit on all of those properties. Then you might look at investing in your personal name. Now, if you've got bigger ambitions and you want to grow a bigger portfolio like myself, you would need to look at using a limited company. And here's why. When you invest with a limited company, you're able to not pay tax on the full amount of rent. You're also able to deduct other expenses that you might have in your property investment journey. Like, for example, mileage, like, for example, meals at restaurants, hotels I put through my limited company when I go and view properties up north, because I live down south and I can't go up and back in a day. So I get hotels up there, and these are all expenses that I'm able to put through the business. It's easier to put costs through for renovations. You can still do that personally, but it's easier to do that as well. Now, the tax that you get on a limited company is 20%. All right, so you're going to pay something called corporation tax. So if you're looking to build a bigger portfolio, maybe you're looking to get 5, 10, 20 houses. I don't know what your ambitions are, but that's an achievable amount of properties if you invest over 10, 20 years, or even shorter than that, depending how good you are at this, then you should be looking at using a limited company. Now, there are pros and cons on both. Now, mortgages are cheaper in your personal name. They're slightly more expensive in a limited company. The interest rates are slightly higher, but the deals are getting better. More lenders are coming on board now, and it's getting more competitive, which is good for us as investors. So if you are looking to grow a decent sized portfolio, my suggestion is that you use a limited company to do that. Now, also, there is inheritance tax benefits. You need to speak to an accountant on that. But Georgia, my daughter, and myself, we've got a limited company together. We're both shareholders. At some point, I will pass away and she will take on that company, or maybe I'll sign it across to her that little bit earlier. And by having that as an option, there's less inheritance tax. You have to set it up the right way, so do get financial advice on that. I'm not an accountant by any means, but when you set it up the right way, that means that you can exit that business, and your children, if they are on there as shareholders or directors, can take that from you very, very cheaply, and it's a lot easier than going through all the rigmarole once you pass. And so that can be another great way to actually pass properties down for your future generations, but obviously make sure you do get great tax advice on that. So that's another reason that you should look to invest in a limited company. So I just think really limited companies are a good thing. I think the tax benefits are significantly better. We put our car payments through that as well. So we have a Tesla, and so the Tesla monthly payments, they go out through the limited company as well. And that's before we pay tax, right? So that's reducing our tax bill again. So there's tons of different things that you can put through that limited company. So that's it. Very short and sweet video. If you found this interesting, guys, give this a quick like, comment below with any questions, and do join us on the journey. Go and check out the other videos. I've got a video on here where we bought our recent property up in Doncaster at auction. I'll put that at the end of this video. I've got a great video on the cheapest places to buy in the UK, as well as a great video on the buy-to-let hotspot. So check out all of those videos by looking at the playlists on this channel, and do make sure that you join us on our next video. Thanks for watching. I'll see you guys soon. Bye for now.